Hello, today we have the great pleasure of welcoming Craig Shesky, the CFO of the Metals Company. Craig, great to have you.
Hey, it's a pleasure to be here.
The U.S. depends almost entirely on imports for several critical battery and industrial metals. When investors look at that vulnerability, where does the Metals Company fit into the solution?
Yeah, it's a great question. In fact, just this month, we've seen a major reduction in the planned nickel ore capacity coming out of Indonesia, which currently dominates the nickel market. What TMC can provide is total independence and, in fact, dominance for the United States in nickel, copper, cobalt, and manganese. We have a resource of polymetallic nodules, these little potato-sized rocks, one of which I have in my hand right here, that have high concentrations of nickel, copper, cobalt, and manganese, sitting about 1,000 miles off the coast of San Diego. We have the technology to collect these rocks and to process them potentially domestically. So this is a very large problem for the United States in that they are reliant upon foreign sources, often funded by China. In fact, for nickel, manganese, and cobalt, the US has zero primary production. What TMC can provide to the United States based on current demand would be about 300 years of manganese, about 200 years of cobalt, and about 100 years of nickel. So it is a very big solution to a very big problem.
Investors have heard about the International Seabed Authority, but you're not working under that. You're advancing under a U.S. regulatory framework. And tell us why that pathway is better, cleaner, maybe faster, more enforceable, even.
Yeah, no, it's a good point. Going back to the 1970s, it actually was a lot of US companies, but also US regulatory influence and environmental prowess that helped kick this industry off. NOAA, the National Oceanic and Atmospheric Administration, sits underneath the Commerce Department. That is our regulator. NOAA, in fact, pioneered much of the environmental research in nodule collection back in the 70s and 80s and concluded that the US should go ahead with this new industry. So the International Seabed Authority was formed in 1994 with a mandate of delivering a mining code to allow commercial activities to go forward. They have yet to deliver on that mining code. But the United States never agreed to join this International Seabed Authority. The United States never ratified the UN Convention of the Law of the Sea. Treaties do not apply to countries that don't agree to them. And the United States saw that, hey, we're the leaders in this space. We police the high seas. And this was back in the original Cold War. Now that we're in another Cold War really focused on metals, the US has every right to regulate entities and citizens in international waters, and that's exactly what they're doing. They put in place in 1980 the Deep Seabed Hard Minerals Resources Act, signed by President Carter. So this has been the law of the land for about 45 years. It's not a left versus right issue, it's a US versus China issue. And TMC is the first applicant to begin commercial production under this US regulatory regime.
Now, permitting. Let's talk more about it. It's historically been viewed as the biggest overhang for deep sea mining. What changed in 2025 that materially de risks TMC's path forward?
One of the key things that changed was a modernization of the regulations put in place by NOAA pursuant to US legislation in the 1980s. We are now closer to commercial production. TMC has done a significant amount of environmental work. We've done much of the exploration work that a contractor would be expected to do. So, recognizing that, NOAA has put in place a streamlined, consolidated process whereby applicants who are qualified and have already done resource definition work and environmental work like TMC has, those applicants can apply for exploration licenses as well as commercial recovery permits at the same time. So really, it's a modernization of an existing rule that was effectively the framework that the United Nations borrowed from when they put in place their draft mining code. So this is a very good set of rules. It's a very good set of regulations, and TMC is going through that process transparently. In fact, we had public hearings on our applications a couple of weeks ago. All of this gives confidence that once a permit is granted to TMC USA, it will survive for many decades to come.
All right, let's turn now again to those what you call the potato-sized nodules. Regarding collection of them, you've highlighted various industry firsts from integrated pilot collection to near zero waste processing of these nodules. How do these milestones lower execution risk?
For any resource project like this, execution risk, capital risk, technological risk is always at the forefront. So yes, while people have focused in this space on the regulatory and permitting risk, Those are elements that are always present in a resource project. Now, typically on land, it would take anywhere from 15 to 20 years to go from discovery of a nickel or copper deposit to production. That's a very long time, and there's a lot that can happen over the course of 15 to 20 years. You may have the technology, you may have the permit, but then as you are ramping up production, as you're building out your infrastructure, keep in mind you usually have to build infrastructure and processing close to where an ore body is on land. Doesn't make sense to transport all of that waste material. That means you have to bring with you port, power plants, railroads, water supply. And as all of that investment is occurring over many years, the commodity markets may not move in your favor. Now, TMC has been able to de-risk this project significantly. We've collected thousands of tons of these nodules, lifting them to the surface. We've developed flow sheets and actually have done pilot processing along with our partners, Pacific Metals, and have now welcomed Korea Zinc, the largest non-ferrous smelting company in the world, onto our share register after an investment of $85 million last year. So all of this helps us de-risk as we ramp up for commercial production. But importantly, it's the resource itself that is the inherent de-risking factor. That's because this resource has a mix of nickel, copper, cobalt, and manganese in one ore body. So rather than being beholden to one or two commodities, which may have violent price fluctuations, we have four commodities. We effectively have a basket that can hedge against some of the commodity volatility and allow us to be profitable really in any price environment.
Good. That segues nicely into our next question here. Your studies, TMC's own studies, show combined project NPVs exceeding $23 billion. Tell us some of the big assumptions behind those ambitious numbers.
Well, these are very detailed documents. They're signed off by third-party experts called qualified persons. They're SEC compliant. And in fact, they're building on resource statements that were originally Canadian compliant. So multiple resource standards have gone into the production of these technical reports. Um, when we're looking at the key assumptions in a pre-feasibility study and an initial assessment, really the key assumptions are what is the top line metal price that derives the revenue? What is your ramp up profile? What is your production per year? And then what is your operating cost offshore? And what is your operating cost onshore? That will result in your EBITDA, it'll result in your free cash flow. And then over the course of, say, the next 50 years, we're able to discount that free cash flow back to arrive at the net present value today. So another factor, of course, is discount rate. And we used an 8% industry standard discount rate in these models. So one can look at the commodity price assumptions in these documents, and they're actually quite close to where the current commodity prices are. I would bet that over time we're going to see prices rise for commodities like copper and nickel. But it's important to note that we can be profitable in nearly any price environment, again, based on the fact that we have four metals in one resource. Now, the key costs offshore are the collection of the nodules and then transport to shore for processing. We have an agreement with our partner Allseas to collect and transship those nodules on our behalf. We also have an agreement with Pacific Metals in Japan to initially process the nodules at an existing facility. So all of this has already been proven out, and really it's just a matter of paying a contract fee to Allseas offshore, paying a tolling fee to our partners onshore to process, and then TMC gets the remaining profitability. So it's a very good model for us. And again, it is the high grade of this resource that allows us to bring in partners such as Allseas, Korea Zinc, and Pacific Metals.
Craig, critical metals, hugely important, probably one of the top stories of our time. Automakers, battery manufacturers, and governments, you mentioned China, all focused on securing these critical metals. But let's talk about partnerships. Who can help you the most right now?
The best possible partner for TMC is actually the US government. In April of 2025, President Trump signed an executive order to unleash America's offshore resources. He directed the Commerce Department to expedite permitting and streamline the permitting process. That has already occurred, and it's under that streamlined process that TMC has applied to begin commercial operations. But that executive order also directed the Department of Energy, the Department of War, Exim Bank, the Development Finance Corp. It directed all of these agencies to explore ways to support this industry, whether financially or whether through offtake agreements, rights of first refusal. There are a lot of tools at the government's disposal, and we've seen over the last year the government has been willing to use those tools, whether to invest directly in projects like the Department of War and Department of Commerce did with TMC's partner, Korea Zinc, building a smelting facility in Tennessee, or direct investments in rare earth companies such as NP Materials or USAR. These are companies that have taken on board to the share register the US government directly. So TMC is going to continue to pursue conversations with the US as our permit gets closer to grant, which we anticipate coming very soon, probably less than 1 year's time.
All right, Craig, you're stuck in an elevator with somebody and he asks you, "What are you doing? Why should anyone care about TMC?" What are you going to say?
TMC has the ability to solve US critical mineral issues for three of really the top dozen difficult metals on the US Geological Survey's critical mineral list. So we can effectively take the US from zero to 100% self sufficiency and even export in some scenarios for nickel, manganese, and cobalt. It is not easy to catch up to China when it comes to the dominant position they have in metals. They've established that over many decades. TMC is the one company that can completely turn that game on its head for the United States. And yet, we are still trading at a very small fraction of the underlying net asset value. We're trading at about 12% of our underlying net present value based on SEC compliant technical reports. So even getting in at $6 or $7 a share is a very large discount to where fundamentally this resource and this stock should go upon grant of a permit in early 2027.
Craig, it is a compelling story about a national priority. Thank you for telling us the story.
It's my pleasure. Thank you for having me.